Welcome back to the Dividend Diplomats YouTube channel, everybody. Lanny, Bert, you know us by now. Everybody, I got an issue here. I got an issue in my wife's portfolio. We're going to talk to you about it today. I'm going to present 3 options of how we're going to fix it. And I'm going to ask all of your help along the way. So please, everybody, help me decide what we're going to be doing in my wife's portfolio in the coming week.
All right, guys, before we dive into that, let's make sure we all smash the heck out of that subscribe button. Give this video a nice thumbs up as we approach 15,000 plus subscribers here on the YouTube channel. Gotta love the dividend investing community. And Bert and his wife are in a very fun, I call it a fun problem, a good problem to have because of a recent surge in stock price on one stock, and on the other, just a stock that doesn't pay a dividend right now. I can't wait to hear.
Yeah, so we've been talking about how we're trying to not clean up our portfolios, but shed some of our smaller positions or consolidate them, add to them, make them larger positions. It's hard to monitor some of these smaller stocks, just stuns that aren't really doing much for you, not in one portfolio. So that's exactly what we're doing. Lanny hit it on the head. One of the stocks in my wife's portfolio recently surged. The other one's just kind of been a dog. So what I'm thinking of doing is taking the gains on this smaller position, offsetting them by the losses in the other, canceling out any taxable event, consolidating the money, and moving it into different positions in my portfolio. That's the premise of this.
Reducing the tax impact, so you're saving dollars there, maybe increasing the total passive income that the total market value or cash that you'll receive is currently doing. So increasing your income, reducing tax expense, cleaning up positions, reducing 2 whole positions. Bert, I'm loving it. Yep. It's going to make it easier for you, I think.
Yep. So I'll tell you right now, the 2 companies. I'm going to start with the bad one because it's not as much fun. This is the easiest decision. Delta Airlines, ticker symbol DAL. I bought this back when Buffett owned Delta. This was before the pandemic, before the airline industry was just turned upside down. The companies were paying at the time a healthy dividend. And when you look to sell, obviously they cut in the pandemic when demand just collapsed. You look to sell, is there a fundamental change in the company? Is in my mind, is dividend going to come back for Delta? It's apparent that the airline sector is not going to be able to shake a lot of the issues that have been plaguing it since the pandemic. Something has fundamentally changed in the airline sector. It's going to be tough to follow. There are always going to be issues going on right now. There are pilot shortages, fuel costs, all kinds of noise. I don't want that noise in my portfolio anymore. So I'm just going to get rid of Delta Airlines. That's gone.
Delta, ticker symbol DAL, for those that don't remember, during the pandemic, airlines cut dividends. They were obviously trying to just hemorrhage their balance sheet as much as they could and cash flow. Obviously, there's a lot of assistance as well. In the meantime, the Delta hasn't come back to resuming that dividend. It's been 2.5 years. Year to date, the stock's down 19%. In the last 5 years, it's down 32%, not getting back anywhere close to that $60-ish 5-year high.
Yeah, so my wife and I currently own 25.405 shares of Delta. Yes, we did get some dividend reinvestment before they cut the dividend. Our market value is $829.72. We're taking that unrealized loss. We're going to realize it now. We're realizing a loss of $505.36. So, but not the best investment. We put in a little over $1,300 into Delta. It's down to $800. So we're creating that realized loss that we can use to offset gains that we will continue to sell or realize during acquisitions. Long-term capital loss.
Are these stocks being held in your Fidelity account?
Yes, Fidelity. These are our taxable account here too. So this isn't a Roth. This is all taxable.
Gotcha. Cool
transactions there.
A question too for you, Bert. When you're talking about Delta's $505 unrealized loss right now, is that then right? That's not from your spreadsheet. That's right from the broker.
Yep. Yeah. So right from the broker. So, yep, we have a little bit to offset gains in the future. So again, Delta, we don't sell often, but when a stock is fundamentally changed, it's there. I probably held on to this too long, but you know what? I'm cleaning up now. I'm happy. That's going to be $830 that we can use towards future investments, which is what I'm really excited about. I'm excited to take that $0 of dividend income I'm getting from Delta on that $830 and move it into dividend paying stocks. And that's going to be a huge boost to our current dividend income.
Yeah, so 830, currently doing $0 in income. So anything above that right now is going to be a nice jolt to Bert and his wife's passive income producing portfolio, helping you on that journey to financial freedom. Let's go.
Yeah, stock number 2 is, drumroll please, it's Ohio-based, Cardinal Health, ticker symbol CAH, down in Dublin. Now, there is a caveat here. We're not selling out of our entire position here. My wife owns 10.549 of Cardinal Health. However, I also own in my portfolio 98 shares of Cardinal Health. So I'm going to pump the brakes on this. We're not getting rid of all Cardinal Health. We're getting rid of my wife's small position. That's just a little slice of it here, but we're still maintaining a large position in my portfolio.
And Cardinal Health is up about 35% up. Yeah. Guys, yeah. Cardinal Health, ticker symbol CAH, the dividend aristocrat, is up 35% this year.
Yeah. And what's really happened with them, they've settled a lot of the opioid lawsuits that have occurred. So they were caught in that, dragged the stock down. They're also dealing with competitors popping up. They're dealing with threats from Amazon, from other people that are trying to eat away at their major business, dealing with the hospital systems. That's what's dragged down on Cardinal Health. After the opioid lawsuits were settled, stock popped up significantly. So now what I'm thinking is just get rid of these 10 shares from my wife's portfolio. Now that I'm going to have a realized gain, I can offset it with the realized loss from Delta and make this a perfect transaction. That's really my goal here.
Guys, that's a pretty, let us know if you guys own Cardinal Health and if you guys have kept your shares or sold your shares to Cardinal Health. Let us know in the comments.
Yeah. So
with how much market value is that now, your wife's account then?
With the 10.5 shares, $737. So a realized gain of $184.37 in my portfolio. All offset though by the loss that I have from Delta, and I still have some left from Delta. In total, with the sell, we're going to reduce our annual dividend income by $20.91. So it currently has a yield of 2.84%. So once we sell, we're going to lose $20.91. But the second half of this video is about to be, how are we putting the capital to work that we are getting from the $737 from Cardinal Health and the $830 from Delta?
Wow. So guys, over $1,500 between both stocks. In total, $20.91 is going to drop at an average overall yield of 1.33%, $20 over the 1,567. So Bert, you're going to blast through this. I have a good feeling.
Yes, I am. So now let's take a quick break here. What we're doing is we're going to invest it. We have 3 options here. I've kind of put down 3 options, and I'm not exactly sure which route I want to go, but options 1 and 2 are investing in new stocks in our portfolio. $1,500 is a substantial enough position where we're going to put it to work in a new position. I have no problem opening up a new position at that level right now. Option 3 is just spread the money evenly against 3 stocks that are undervalued now, that have very high yields, and just keep lowering my cost basis in current positions, but adding more dividend income there. So those are the 3 options that I'm going to present to everybody here. And that's where I really want your feedback in the comment section below. Let me know what you're thinking. I'm still not decided on this.
So in the Delta shares, those are also in your wife's account then?
Yep, they're all in the same. So this is all getting consolidated into one account.
Gotcha. All right. Well, I mean, Bert, so what are the 2 individual stocks you're thinking of just doing one lump into?
All right. Option 1, no one should really be surprised by this. Texas Instruments, ticker symbol TXN. I've been talking a lot about this company. It's on my watch list. We wrote about it on our blog. Semiconductor stock. It's a little undervalued now, not the cheapest stock. That's the reason, the interesting thing. Their PE ratio is about 17, 18-ish range. Payout ratio is perfect in the 48%. And they have strong dividend growth. We know what Texas Instruments is. They're almost a dividend aristocrat.
They were who they thought they were.
Exactly. And that's why we like them. And that's why so many people in the community like Texas Instruments. It'd be nice to build, this would get us about 8 or 9 shares of Texas Instruments if we were to do a full lump sum into it. Their yield right now is 2.69%. So what option 1 is going to do from an overall net dividend yield impact is it's going to add about $20. How am I getting that? I'm just going to round this out to $1,500 just to make this easy because it was a nice flat number. 1,500 times the 2.69% yield for Texas Instruments would produce a position of a dividend income of $40.35. Back out the 2091 that we're factoring in, we're losing from Cardinal Health. That gives you overall net additions of $19.44. And that's really where we're picking up the benefit in these moves, Lanny, because the $0 we were earning from Delta are going to be put to work in either Texas Instruments, stock 2, or that bucket.
Wow. Okay. Great stock. And does she already own Texas Instruments?
No, the ones I've been adding have been in my portfolio. So
gotcha.
We have
all right. So what's that second dividend stock then that you're thinking about doing right now?
You're going to be happy, Lanny, because this is a stock I have avoided for the longest time. I've watched you buy. I've watched people buy this. I've watched everyone get a huge special dividend from this stock, and I have always waited on the sidelines. But this seems like a pretty appropriate time for me to start considering Lionel Basel, ticker symbol LYB. We have a small position in Dow in my portfolio, so we don't really have much exposure to the chemical sector. And if you want to talk about a move that would add a boatload of new dividend income, this one would add a lot of new dividend income because their current yield is 5.66%. So the new position, if we invested 1,500 in Lionel Basel, would produce $84.90 of dividend income. That's a net addition of $64 of dividend income right there.
Wow. Huge. Obviously, yeah, you gotta love that yield. It would be a new position. Obviously, you guys know I have a large position in Lionel Basel. Take a link, check out our link to the dividend stock portfolios below in the description of the video. Obviously, you know, Lionel Basel holds a sweet spot in my heart as I own over 118 shares of this chemical producing company right here. So, all right, I see I see where you're going. Okay.
The metrics are looking great on it. I'll flash them up here and just reading through it. PE is great, payouts great, dividend growth is great. Even without that, doesn't factor in the special dividend. So that was a nice treat. New sector. Also, Lanny, this would be a fun note. It would make nibbling and adding 1 or 2 shares of Lionel Basel a possibility because I don't want to just buy 1 share without having a larger position. So it would add it into that category in my portfolio.
Got it. Okay.
Yeah. So option 3.
Second option. What's option 3 here?
All right. So this one is if I don't want to start a new position. This one's going to be investing in 3 stocks that my wife already owns in her taxable account. They're also 3 dogs. They just haven't been performing that well. I don't need to give too much background on them. We all know that these companies haven't been well. So for this analysis, I'm just going to say I'm going to split the money, going to add $500 in each one of these 3 stocks to do it. Those companies, Citigroup, ticker symbol C. Citigroup's at least had a good 2022 so far. Buffett's investing in them. We're just down from my wife's average cost, which is around 60. Verizon, ticker symbol VZ, which I don't need to talk too much about. Everyone knows Verizon's having a terrible year. And then even worse, Intel, ticker symbol INTC. So Citi's yield is 4.03%. Verizon's yield above 6% at 6.18. Intel's at 4.64%, which is absolutely wild. That would give, if I put 500 in each, that would give you an average yield of 4.95% on this option 3 bucket.
There you guys have it. 3 options. Let us know in the comments right now what 3 options you like. Let's give it 30 seconds before Bert, I ask you which one are you liking.
Yeah, I mean, I think it's interesting. They each have their pros and they each have their cons, right? Texas Instruments isn't the highest yield, but it's a fantastic company. So I don't think you can ever go wrong there. It's just not the cheapest of the options. And you're not getting the largest boost in dividend income, although that's not really what matters here. It's investing in a quality stock. Lionel Basel is a banger of a move. It's a new sector. It's a stock I've looked at and I've always wanted to get into. It's cyclical, so you still have that with Lionel Basel, but it's a great company for a variety of reasons. And bucket 3 is just more of, so I want to lower my cost basis, increase my yield, and just not have to follow any more stocks, but just keep adding to positions we already own.
It's a tough call, man.
Yeah. I really don't know. I think that's the beauty of it. But it's interesting as I keep going through this, I keep talking through this. I think it would be fun to build a position in Lionel Basel right here. but I can add 1 or 2 shares to any one of those in bucket 3 at any time too. I can just keep buying 1 share of Citi, 1 share of Intel, a few shares of Verizon. I can nibble around at this. This is kind of a unique opportunity to build a new position in a new company altogether. That's a pretty substantial one.
And have you considered any mutual funds or ETFs at all? Or are you just like, I'm okay there?
Yeah, I have, but I think for this, I'm good. I think it'd be fun to add another individual stock because we have some good options in front of us.
So would you say you're more interested in a new stock then?
Yeah, I think where I'm leaning, because this is a substantial enough amount. That's where I'm leaning option 1 or option 2. Still on the fence of Texas Instruments or Lionel Basel. We'll see which way the wind blows.
Guys, if you have $1,567, what are you investing in the first 2 options? Are you picking Lionel Basel, option 2, or are you picking option 1, Texas Instruments? Let us know that in the comments.
Yeah, everyone, again, I'm not decided on this. This is still kind of up in the air. Let us know. Let me know what you think. Just any new information you have that might help me make this final decision. That would be fantastic. I'd appreciate any support. And if you haven't already, subscribe to this channel. Give this a thumbs up. Everybody, thank you guys. I appreciate your help in advance here on this one.
Guys, that's Bert trying to increase his passive income total. Thanks for stopping by the video. Can't wait to see what you guys are helping him out with and what Bert ultimately ends up doing here, because we all want him and everybody to get to financial freedom. That was Bert and Lanny from the Dividend Diplomats. Over and out.